Jay, so glad we're here. This is a big deal and a big day. 5th annual. Yep. So congratulations.
That's
exactly right.
We're still here.
Yep. And all the big guys are here. Let's start off with Leon Cooperman, founder of Omega Partners. What can we expect from Lee? Give us
well, you know, Lee, as you know, is not he's no shrinking violet. He calls it as he sees it, and he's going to give us, I think, a very good overview of both top-down and bottom-up ideas. So he's going to give us obviously his well-informed view of what's happening in the world, but also I think he's going to give our audience some very good stock ideas that he's focused on, which is really kind of the main thrust of what he does day to day.
In other words, it's one thing to have an opinion on the world and markets. It's another to then say, given what I think, now here are the positions I'm putting on.
Precisely, and I think that Lee has done a great job, obviously, in his illustrious career of mixing the two, and that's what we're expecting from him at lunchtime.
We've got a bull-bear debate. Jim Chanos on the short side, Byron Wien on the long side. They're talking China. What are the issues?
Yeah, I mean, I think the biggest issue really has to do with, obviously, Byron's position largely. I don't want to put words in his mouth. It's just that the secular growth story for China is fantastic, and I think
10% GDP growth.
10% GDP growth. You have massive, capital constraints there. All the rest of it, and then on the other side, you have just the idea that it's hard to have the right capital allocation if you're fooling around with the price levels, if you're fixing your currency to another currency. So that, I think, is the general thrust of the debate, is that you have this great secular growth, but there are cyclical issues that have to do with the dislocations caused by the currency.
And that ties into the commodity trade. What's your outlook on commodities?
We're quite bullish, and we're bullish simply because we're looking at what's happening around the world in terms of central banking, and at the end of the day, we think it's largely a function of liquidity. Some central banks are starting to tighten, but Fed is still very easy, is going to remain very accommodative. In our view, Bank of Japan obviously just added a lot of liquidity to the system. ECB seems to be a little bit on the other side, but from our perspective, you're going to get stronger U.S. economic growth coupled with still easy monetary policy, and that's a hard thing to stand in front of in terms of commodities.
Now, we saw disastrous home sales numbers yesterday, and there was talk of maybe more quantitative easing. Another round. What do you think?
I don't think it should be off the table at all. I don't think it will be off the table.
But is it on the table?
I think it's on the table. And just based on my conversations with people that at the Fed that follow these things very closely, you're not going to know, even when quantitative easing is over, you're not going to know that it's over. Right? They're not going to take, I don't think the Fed's going to take any sort of victory lap that it's vanquished deflation. They're going to keep all options on the table. The unemployment rate is still high. That is a very important part of their mandate. From their perspective, I think they've achieved price stability largely, at least so far, believe it or not. And so I think they're going to remain easier longer than the consensus expects.